All right, everything looking good. We should be live. Somebody let me know in the chat everything is coming through loud and clear. In the meantime, let's go ahead and get this stream started. Welcome back to the channel, Crypto Trend Trader, with our Sunday evening market look ahead. It is 8:03 p.m. Eastern Standard Time on 11/13/2022. And of course, as always, before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research. And of course, trade responsibly. All right, let's go ahead and take a look. So we had a little bit of volatility in crypto. Nothing unexpected to say the least. So we will get to that. We'll talk about where it's going, where it's headed. We know right now it's headed down to sweep the lows. Bitcoin at 16,200. Looks inevitable that we're going to at least test the high 15s, test those lows, see if they hold up. My suspicion is, spoiler alert, they're not going to hold. So obviously we saw a big sell-off in the DXY and TNX. So let's start where we always do and see what they're doing. So TNX right now on the daily, we are confirming the 821 cross. We just had an aggressive sell-off down below some key support. Technically, we have broken that support. The main area to watch would be that previous swing here in yellow at 3.58. As far as I'm looking at it right now, we had a pretty aggressive move back down. Typically, even if we are going to continue down here and see a deeper retracement, we'll see some kind of like reflex rally back up. Basically a push back up, an attempt to stop the trend from confirming to the downside. Assuming we do get rejected and we go into a deeper retrace, then we'll look for that yellow area. But right now, it's not crazy to think that we could see it move back up over the next day or couple days. Back to retest the 4.0 level. And then from there, whatever happens, we'll have to play it by ear. But, we can assume it gets rejected and goes down and then threatens the previous swing. And then, obviously Slinky Theory kicks in. And we'd be looking for somewhere around the 200s, which depending on how long it takes to get there, we would assume that would be a buying opportunity before we go higher. Now we're actually going to jump over now and just look at the DXY. Because the DXY, and, we already know this, obviously, is basically a couple days ahead. And when I say a couple days ahead, I mean because we had such an aggressive move. But here we see the 821 bear cross. We come down to a key support level, and then we get a back test up here to a lower high rejection. It could have got rejected here at the moving average. Instead, it went higher, but just put in a lower high. And then eventually we see the sell off. And now here we are at the 200s. So we came down to our key level that we were looking for, which was our horizontal support Fibonacci levels, and then also the 200 moving averages, exponential and simple on the daily. So we've come down to support. This is obviously well ahead of TNX on the retracement. But at this point in time, we would look at this area as a buying opportunity. So we saw, essentially, there's two ways you would be playing DXY, obviously, is, trying to make money off the actual movements in the currency, whether you're speculating in, your native currency or dollars in your native currency, etc., or whether you're just using it as a gauge to when to be risk on or risk off for equities or, cryptos, whatever. Now we had a pretty aggressive move in most equities, unfortunately not cryptos, as the DXY fell out of bed, as the dollar weakened. So now if we're expecting a bounce, even if it's a bounce to a lower high and we go lower or, go sideways for longer on the DXY, we would still be looking for some kind of relief rally, some kind of push back up to somewhere around like 109 or 110. Then we could get rejected and then continue lower if that's what's going to happen. I suspect the dollar will continue to go higher in the long term, the DXY will. So right now it looks like we're going to see risk off back in equities or profit taking, etc., as the dollar probably has some form of like dead cat bounce over the next few days or week. So while we're here, we'll take a look at Tesla and Magma and see what's going on. So we saw a pretty aggressive move, obviously, in the last week. As expected, we were looking for weakness in the TNX. We were looking for weakness in the DXY. And then we expected a, equities rally corresponding. Obviously, that corresponded with the CPI print and the potential that inflation has topped, or the thought process that we're beginning the topping pattern and that way the Fed can start using this data and start pulling back. Therefore, equities are looking forward, so they probably have already bottomed. So at least that's the mentality. Not saying I agree with that. But again, we see Tesla has bounced perfectly off the 236. That was our target area for a scalp to the upside. Did not take this position as of now, just with everything going on. And the setup looked good, but just didn't quite happen, but it looks like we are printing some bullish divergence. Unfortunately, the move has already aggressively moved to the upside. Typically, those big moves, counter trend, are not sustainable, but we are expecting a move back up to like 207 to back test the 236 on Tesla. And then on to our Magma stocks. So the M in Magma, Microsoft, again, surged off of the 0.5, off the target. We had put in play this potential setup to the upside. 23% risk reward setup to backtest the 200s. And, more than half of that has already played out. Again, beautiful setup. Played out beautifully. You can't complain, honestly. Next, we have Apple. So Apple, again, looking like it's going to surge back up here to backtest the 200s. Apple has been holding up pretty well. We saw Tesla basically doing the same thing, and then finally it broke down to the next level. I imagine it's just a matter of time before Apple does the same thing. But again, it has been holding up better than pretty much anything else in the markets. Well, that's not putting in new all-time highs, I should say. So Google on the daily, again, bounced. It didn't have as technical of a move off of the 0.5. It did overshoot it a little bit, but again, backtesting the 382. And we know the idea is essentially that, you drop down a level, you backtest that level, you drop down another level. Or if something's extremely strong or extremely weak, you might go down or up 2 fib levels and then give back one of them, and then 2, and then 1, etc. So it does look like we're going to come back up here to retest at 382 at about 99. I do expect that to act as resistance. I do not think the market is in. I do not think everything is just going to turn around and be rosy again. No, I don't think so. Meta, had a nice bounce off didn't quite get to the 0.5, but got to the blue box area. And again, nice back test to the yellow area. So we basically just got a reflex rally from 85 up to like 113. Again, nice big moves in some of these assets. And while crypto was melting down, a lot of these tech stocks in particular grabbed up some of that crypto money. People were fleeing from crypto and, fleeing into, Meta or Google or Tesla or whatever, choose your risk on stock here. So, I think that's what we saw. A lot of these flows are coming from crypto and then into tech, as suddenly crypto doesn't feel nearly as safe, because majority of it's a Ponzi scheme. But we already know that. It's not like a surprise or anything. And then on to the A, Amazon. So Amazon had a nice little bounce off the 886. We know typically we could see a bounce off the 886, but the probability of an actual pivot, and that being the macro low, is like less than 5%. So I'm not exactly thinking like this is a wrap. But again, all we're seeing is we lose support, we break down, we find support at the next level, we backtest that support level. SR flip, if we get rejected here, we likely go lower. When and if we do go lower, which, the measure move already played out, we basically did a 100%, round trip. I don't think this is just going to be the bottom, though. I just don't see it. It is possible. I'll be the first one to, I shouldn't say the first one. I'll be the first intelligent person to actually pivot and change my view when and if I'm wrong based on technicals. But I'm not just going to be like, what, I got a feeling. Because I just don't see it right now. Anybody that, is the owner of a business or, deals in properties, real estate, anything, the economy, online sales, retail, you could work in a gas station and have an idea what's going on right now. And the fact of the matter is, we're not going back to record valuations anytime soon. And even if we did just turn on the money printer tomorrow, even if they did just print 5 trillion or 10 trillion and just hand it out to people, the truth is some things would pump, but we lost a massive, ridiculous amount of momentum. And me being a momentum trader, I know that we're not just going to pick back up that momentum and go to the upside. So when we look at something like the Dow Jones and it looks like all of a sudden it's, potentially setting up to go back to new all-time highs, to me, I don't buy it. I just don't buy it. But, I also live in the real world. So there's clearly a massive disconnect between Wall Street and Main Street. And the fact of the matter is that Wall Street is still, and has been now, for this whole year, it has been convinced, though, that things aren't that bad, that any minute now we're going to go back into quantitative easing and record valuations and money printing and everything's going to pivot. So, the bet is basically on direction and time, because they could be right. I'll bet on the same thing if I get an undetermined amount of time. If you tell me, hey, would you bet on the Fed pivoting, yes or no? And I'm like, well, what's the time frame? And you're like, no, eventually does the Fed ever pivot and stop raising rates or not? I would obviously take the bet that of course they would stop raising rates. They're not just going to indefinitely continue to raise rates for, till the end of time. So if you're betting on a Fed pivot now, if you're betting on the bottom in these markets and you're trying to front run it, which is what the markets are doing, what Wall Street's trying to do right now is front run, the economy and buy the bottom in stocks. If you're trying to do that, that's fine. But understand, you're not just betting on the direction that we're going to go higher. You're betting on the time. Because if you're wrong on the time, we're just going to end up going lower. Because if the Fed keeps raising rates, if inflation comes down, but the Fed doesn't immediately pivot, et cetera, over time, things are just going to continue to get worse. The metrics, the numbers, all that. And in my opinion right now, the only thing that's making earnings and, the markets actually not look as bad as they are is, the inflation. Because it's monetarily making numbers look a lot better than they were. But we talked about it in the last stream. If you have a business and you sell 100 widgets, and then the next year you sell 90 widgets, you sold less goods. So that's bad. Your business is selling less product. That's not good. But there's an easy way on paper that you could have more revenue if you went from 100 to 90, as long as, you're selling your product for more than, roughly like 12%, you're going to end up having higher sales. And then as long as you maintain your margins, on paper, you could still look good. But the truth is, you're not growing. You're actually dying. Like if you're selling less of your product. So the truth is, inflation can mask a lot of things. Sometimes we see numbers that are inflation adjusted. Sometimes we see numbers that are seasonally adjusted. All the time we see statistics that tell a story, or paint a picture. But the truth is, that can all be bullshit without even being like false. So we have to be real, real careful. Even statistics right now are messed up because of a lot of crazy stuff that's happened. So looking at U.S. oil, so we're still trapped here in this same zone. We've been talking about it, obviously. As long as we're below 93.25 and above 83.44, basically range bound. The key is we're looking for this back test of 200. But for the first time, this entire trend, oil has confirmed into a bear market. We did not see the 200 simple ever flip red this entire time. So, if there was ever a danger, this is going back to November of 2020 right here on U.S. oil, WTI crude. We went into a bear market here in September of 2020 until November of 2020. And then we've been basically parabolic since then, with a couple tests of the 200s. So now we're confirming into that bear market. So, does this have to go really, really low? Like, does oil have to get just absolutely wrecked? No. Here was basically just trying to flip back into the bull market right there. But before that, if we just skip that little anomaly right there and we just look at this is what happened last time when it flipped red. When we rolled into a bear market, we confirmed into the bear market here in, basically January of 2020. And then we then proceeded to melt down into the Rona sell-off. We basically went down 100% because it went to zero, negative, whatever. But regardless, if you just say, well, it just went down a lot, and you're like, well, did anything in particular happen? Any warning signs go off or anything right before it went down a lot? And you're like, well, yeah, confirmed into a bear market. It's like, well, what does that mean? How do you quantify that? Well, we're below the 200 exponential and simple, and they flip red. Oh, okay. So if there was one thing that has to happen before a massive capitulation, and it's we flip into a bear market, that should be just a screaming red warning signal. Like, hey, I'm not saying oil has to melt down and shit has to hit the fan. I'm not saying it has to happen. But I'm saying that if it's going to happen, we'll see this happen first. And that's exactly what we're seeing right now. We're seeing the warning sign. So that being said, still very bullish on energy long term, but right now, danger zone for me. So looking at the VIX, we did break down from support on the VIX. We basically got the back test, SR flip, and then we put in a lower low. So now the key is watching this level right here, obviously 20 on the VIX. Historically speaking, we know that for the last couple years, down here, we hit this bottom zone a bunch of times around 15. And every time we hit 15, it was an amazing buying opportunity. And then we shoot up to the top of the channel, come back down, and then it was at 16, and then it was at, 18, and then it was at 19. So is now the amazing buying opportunity going to be at 20? Is it going to be at 19 again? Or are we going to potentially break down and, start to violate what has been a series of higher lows? So if we have higher lows and we have lower highs, we're basically squeezing into, a wedge, a triangle, a flag, whatever you want to call it. The key is we're coiling up like a spring, and eventually we're going to break in one direction or the other. My likelihood always is that we just continue to coil up until we don't. So one single break of the range. So while we technically have broken down from the ascending support right here, we did that once right here, and it obviously proved that to be sort of like a fake out or whatever. The most important thing is, again, the swing. Taking out the swing low or the swing high. So until one of those two things happens, we're looking at a range between 20 and 34. So if that's the case, if we're at 2250 and we're looking at 20 as the bottom or near the bottom of the range, we're getting towards ideal buying opportunity for a move back to the upside. So, ideally we would buy the heart line of the channel right around like 21 or something like that, and then ride it back up to the top of the range, about a 56%. And again, if you're not playing the VIX specifically, maybe you're taking that as a sign on equities. So wait a minute, if the DXY is at support on the 200s and the VIX has been melting down pretty consistently and equities have had a nice, sustained, pretty violent bear market rally. I mean, that's what it is. Let's call it what it is. A violent bear market rally as predicted, as expected. Well, it tells us probably that rally is coming to an end or has already ended. I mean, we'll see obviously in time. So Dow Jones on the daily. So we did recapture the 200s. We flipped the 200 exponential back blue. We did that a couple times along the way. Did not end up breaking out. But here the 200 simple is getting ready to flip as well. So real area to watch is taking out that previous swing high at 34,134. I did not think in a million years the Dow Jones would be back at this level this quickly. Keep in mind the Dow Jones was very strong on this rally up right here. And people were convinced we were going back into a bull market. It's the same thing again. People are convinced that was the bottom and we're going back into a bull market. A lot of this has to do with healthcare, with industrials, with a bunch of our key components of the Dow. And then also, the weakness in tech is not reflected in the Dow because, it doesn't have all that trash in it. So, but we are currently 9% off of the all-time highs. 9%. And, in the last week, we had basically, what does that amount to? About a 5% rally. So maybe we just rally 5% this week, 5% next week, and we're at new all-time highs before the end of the year. Is it possible? It is. It is. It's looking more probable by the day when we look at the Dow Jones. When we look at our other indices, though, starting to paint a little bit different of a picture. They did catch up. Obviously, we saw they were underperforming severely and then just exploded to the upside as essentially the Dow was enough. Enough money went into the Dow, enough bullish signs crept up in the Dow that it convinced people, hey, the S&P hasn't moved yet. The, triple Q's NASDAQ has not moved yet. And then the Russell IWM hasn't moved yet nearly as much. So we'll just buy all the trash that hasn't moved and then wait for it to catch up. The same way people buy, crypto trash coins because it outperforms Bitcoin. That's essentially what I see happening in these other indices as well. So Dow Jones very strong right now. Other indices telling probably a more accurate picture, but who knows? Again, we could be a couple days or a week away from the S&P looking the same way as the Dow does. A break above like 400, 420. But keep in mind, we've been calling for predicting a retest of 400. So we're basically there. So again, we get, bullish at the bottoms, bearish at the tops. A lot of other people are the other way around. They get bearish right here, or bullish right here, etc. So SPY, trying to reclaim the 200 exponential and simple, not nearly as bullish as the Dow, but looking pretty good. Triple Qs are next. So we have basically this double bottom, this W double bottom, and we have broken out of the top now. Back tested the 382. It seems likely if we're going to get the back test of 200s, if we're going to get the measure move, it takes us up somewhere around like that 315 level. It seems very likely right now. We've been watching, obviously, the support here in yellow, the resistance here in yellow, and we say, obviously a breakout above the resistance likely leads to a measure move, and that lines up, obviously, with the 200s, the descending resistance, all that good stuff. So while we're still underperforming on the NASDAQ as of late, nowhere near the 200s, definitely not above them, and we're still well off that previous high, there's definitely some potential now for a big burst up here to like that 308 range or something like that. IWM, Russell is at the 200s currently, still a ways off that previous high. It is already flipping the 200 exponential bullish. All it's got to do is just hang out above this level and eventually, it starts to look bullish. So we'll see what happens. But overall right now, the major indices are starting to paint, a picture that says, hey, we're headed back to new all-time highs. At least the Dow Jones is. Now, do I buy that? Not for a second. Russell is still 30% off of its highs. That's a big fucking difference from the Dow Jones that's 9% off of its high. 41% off the highs for the Qs. I mean, again, that is a massive, massive difference than the 9% that we're seeing on the Dow Jones, which, obviously just when I say it sounds ridiculous. And then the SPY still over 20% off the highs. So again, Dow Jones painting a very, very different picture. And we got to respect it. I look at the Dow Jones and the SPY as much more of an accurate gauge of the overall health of the markets. And, arguably the economy, obviously there's some disconnect lately, but XLE is next, energy. So we are here at the highs. I mean, this is it. It's do or die. We either continue up from here and this thing just surges and just rocks out, or, we're basically double topping right now. Could see a little push up here, squeeze, rejection, and then breakdown. We'll have to see. Again, still very bullish on energy, very bullish on earnings. Even if like oil and nat gas prices come down, these companies are still massively profitable. So not crazy to think that we could see these things just continue to run. The thing you have to be really, really careful for right now, though, is stuff that's really weak. People are selling because they're tax loss harvesting, and stuff that's really strong, people are putting money into because it's been performing well. And obviously, if you have to disclose all your holdings quarterly or, at the end of the year, whatever your situation is, depending on who hypothetically we're talking about, at the end of the year, one, you can't have just a ton of cash sitting on your books. Two, you don't want to be holding some trash ass cryptos, even if you just took big losses in them or whatever. Maybe you want to liquidate those and up your holdings in energy so it looks like you're at least positioned for like something intelligent. Now, typically though, these big moves are after the fact. So we already saw crypto melt down. So, people selling now, who knows? Maybe they're selling the bottom. Same thing with energy. We already saw crypto or energy melt up. So people buying now, are they buying the top? I mean, we'll have to wait and see. Either or both or neither of those could be true. But the fact of the matter is, when you're at a key resistance and then you see some kind of catalyst like that come in or key support, and you see that end of the year tax loss harvest selling, something like that coming in, could very easily give us a false signal at resistance. So we got to be careful for like a false breakout or failed breakout. Same with Bitcoin. People were expecting the potential of that breakdown to be failed or whatever, but so far it looks sticky. XTN transportation still very much in a bear market. Push back up here to the 200s, still very much below it. But, again, this is the same signal we saw back here. Everybody's going very, very bullish in August after everything was coming back up and it was looking like, oh, back on. I just don't see it happening. I mean, I could be wrong. We'll see. Same with SMH. These things were just absolutely beat down, putting in new lows. Now they're back testing the 200s. Last time we put in new lows, we back tested 200s. We go on to put in more new lows. So that's what I'm expecting. But I'm also trend and, mechanical trader. I'm not just like, I don't know, I got a feeling about this one. XLU, reclaiming the ascending channel. So as long as we're back inside that channel, seems more likely than not we're headed back to, retest these resistances we broke down from, then the heart line, then the previous high and Fibonacci levels, and then potentially, top of the channel again. Keep in mind, we've been operating in the bottom of this channel almost exclusively since the Rona dump back in March of 2020. So we've been operating the bottom of the channel. So it seems most likely to me that, support is going to be basically like 67 and resistance is going to be like 77. And we're probably just going to chop around in there until we don't. XLP is next. So consumer staples, again, threatening the 200 simple, back on top of 200 exponential. This is the back test to confirm into the bear market. So there's literally a battle, a war, going on right now between the bulls and the bears. And one of them is going to win. And we're either going to go back into a bull market and start surging back up here to new all-time highs. And retail is strong. And I'm just completely wrong. Or this is just the back test. We push all the way back up to resistance. We may see one little push up here, towards the top of the channel. But the truth is we're probably topping out. We're probably confirming into the bear market. And this is about to roll over and then head down here to retest the lows. It's been trading very technically, broke back above the 382, back tested the 236, back tested the 200s. The next real resistance we have is a descending channel top. And then after that, we have these two levels, like 76 basically up here. And that's what we're paying attention to. That is what we're paying attention to. So, We'll see how it plays out. We really don't need this one as much. We'll see how it plays out. But again, I'm expecting all of these things to roll back over. It looks to me, when I see TNX, with an aggressive candle like that, we probably see a reflex rally in the other direction. When I see a DXY get crushed like this and come down to support, we probably see a reflex rally in the other direction. And then when I look at all these markets, all these major indices, and they're all basically at resistance, it looks to me like, well, we just exhausted our next move. So time to reverse back the other direction again. Maybe it's the bottom, maybe it's the top, depending on what we're talking about. But right now, that's what it looks like to me. So Bitcoin on the daily. So anybody that's in the group knows, obviously, we sold our scalp positions on Ethereum, Matic, and Bitcoin into the 18,000 pump. Literally said in the group, I'm selling my positions into the 18,000 pump right before it happened. And then, basically did exactly that. So, and you could see on the 4 hour, even if, I set it basically into this one right before we hit 18K. It was like 17,869 we topped out. I figured we would push up there at least one more time. And when we did, that was it. Out like trout. And then again, you see that we didn't have a single candle close above 17,578. So if you didn't do it on the first one, you didn't do it on the second one. I mean, the third time we could not close above that level and we had big rejection wicks. It should have been pretty fucking clear that we were going to get rejected. So that's exactly what happened. We got rejected, and now we're just melting back down. As soon as we came down here, put in a lower high again. So we have a high right here. We have a lower high right here. And then we continue down. We have not been able to get back above the 8 on the daily. On the 4 hour. So as long as we're not above the 8 on the 4 hour, we're melting down, getting ready to threaten the lows again. And it just looks to me like, hey, more momentum, more continuation of the downside. I think we'll probably see a decent amount of buying come in, either at or around the lows, as people will try to hold that up. I don't know if it's going to hold. You guys know my target to downside is 14K. After that, potentially around 10K. But 14K looks pretty viable right about now. Maybe another 15% down from where we're at. Doesn't have to happen, but seems likely. The 4 hour could see a pop here. Daily looks just beat up, like it's just ready to continue melting down. Ethereum. So, I mean, it's pretty clear what's going on here on Ethereum. So, we have this key support level right here. We break through the support. We backtest the support. Could not get back above it. Rejected. And now we're melting back down. Again, it's holding up a lot better. Did not put in a new low. This would be retesting that low. And that's still well off the low from back here in June. So, people still really believing in Ethereum. For now, at least. Total market cap on the weekly. So we did just close a new macro low on the weekly market cap. The previous low was 846 billion. We closed down here at 782 billion. We're holding up right now above that 754 billion. But we know what time it is. We know what time it is. I mean, this was the peak in 2018, 2017, depending on how you're looking at it. And we know the next level down is basically 518 billion. So another 33% haircut. So whatever cryptos you like, whatever cryptos you believe in, whatever cryptos you're holding right now, just be ready for them to lose 33%, just in case. Does not have to happen, but if we go down there, maybe your crypto will only lose 30%, or maybe your really shitty crypto might lose 70%. But just in general, it looks like, crypto market cap is ready to lose about 30%. Bitcoin dominance on the weekly. And this is the Uri thing, Bitcoin dominance. Basically at support right here. Looks like it's ready to break down. So what does that tell me? Bitcoin's about to lose dominance compared to stable coins and altcoins. Likely, I mean, if we break down from here, this was the peak in the 2017, 2018 bull market. So does altcoins just like go on another run or something? Does Bitcoin melt down because it gets hacked? Or somebody's able to just there's some kind of error in the code and then just minting Bitcoins? I don't know what's going to happen. But right now, it looks like Bitcoin is ready to take a beating compared to alts. So maybe that means we're just going to go to the moon. I honestly don't know. I honestly do not know. Maybe there's going to be some massive scan wick on some trash crypto, and it just pumps up like 1,000% instantly. And that's like our capitulation wick on the Bitcoin dominance chart. That's also a possibility. Bitcoin dominance on the weekly, subtracting out stablecoins. painting a little different of a picture now. We see Bitcoin strengthening compared to them. So what is going on? People are just holding more stable coins. Is Tether just minting like crazy? Or USDC? Are people just pulling out of all these cryptos and going into stable coins? I mean, it looks like it. It looks like Bitcoin is strengthening compared to altcoins, and stable coins are making up for the strength in Bitcoin. So right now, the most strong thing in crypto, it's definitely not altcoins. It's definitely not Bitcoin. It's stable coins. So more money is going into stable coins, and it's coming out of altcoins faster than it's coming out of Bitcoin. So if you ask me, hey, if this just continues exactly how it's going right now, 1 year from now, what's going to be the highest percentage-wise compared to where it is now? I would say stablecoins. What's going to be the second highest? I would say Bitcoin. And then what's, the loser? I would say altcoins. Based on the trend. Does not have to continue, obviously, but. So daily cheese, that Chili Willy, that chili cheese dog, still above, well, it's at or around the 200 exponential, still above the 200 simple. Again, looks like it's probably going to end up double top rejectioning here. Breaking down from this, you could argue that we have like sort of a descending resistance. And that's basically where we're holding up for now. So, it looks like we're going to head back down here to around like 14 or 15 cents again. We have a Fibonacci at 13 cents. Seems very likely. Still much stronger than most cryptos because it's at or above the 200s, but Solana looking strong. If you're standing on your head and you change the colors on your chart from green to red or red to green, it does look good. It is making, new cycle highs, if you're on your head. 1278 lost 66% of its value in like the last 2 weeks. Pretty bad, pretty rough, and probably just going to continue to melt down. When does it stop? Nobody knows. Probably at 0. Chainlink on the daily, barely just holding on to support for now. We know that's the 618. We know if we break down from the 618, our next target's a 0.5. I'm sorry, the 786. I'm going to move this out here. Obviously, this has been on the chart for months now, and now it seems very, very likely that we are headed down to the 786 at about $3 on Chainlink, which will probably look like a buying opportunity for me. There's quite a bit of support on the way down, around like 460, $4. So I don't think it's just going to fall out of bed. And if it does, it could overshoot. But there's definitely going to be an opportunity down there. Avalanche, again, new cycle lows at the lows again. Just looks absolutely atrocious. The entire crypto space just looks absolutely terrible right now. No surprise, as basically we're just seeing like pyramid schemes and Ponzi schemes imploding one after another. Again, is anyone surprised by any of this? No, obviously not. Not around here anyway. Been preaching about the charlatan scam crypto space now for some time. And keep in mind, I'm a strong advocate of crypto. But I can see contagion. I can see, sickness, disease in financial markets. And crypto is and has been just disgusting what's been going on for the last like 2 years. So, I don't wish harm upon people, but I mean, I'm not going to lie. I hope these fucking people have to pay ridiculous amounts of money and spend tons of time in prison for what they have done to, there's like people's pensions getting invested in fucking crypto Ponzi schemes and shit. You have crypto.com literally has 20% of their holdings in Shiba Inu coin. Like, what in the actual fuck? I mean, get the hell out of here. I mean, the SEC should be absolutely fucking ashamed of themselves for what they have done. Absolutely ashamed of themselves. I mean, we know the SEC doesn't actually give a shit about regulation. All they care about is getting paid, basically extorting criminals for breaking laws. That's basically what the SEC is. So they're basically just like a corrupt mafia. So congratulations, Gary Gensler. You're a piece of shit. I mean, it's not like we haven't seen this going on for literally years. And they're proud that they like shut down one. They're like, well, we got one crypto has been ruled as a security now. So we're doing a great job. Whoa, really? It's because it doesn't take 9 minutes to make a new fucking cryptocurrency. Oh, okay. I mean, just an absolute fucking joke. Absolute fucking joke. But you can tell how I really feel. Not holding back on this one. So anyway, let's keep rolling here. So Avalanche, looking pretty rough. Obviously, we have a target down here at the 1.618. All the fucking way down here at $8, $8.50. So does it get there? I don't know. Probably. I just would be real careful just hodling crypto right now. Um, Polkadot. Again, new lows at the 786, descending resistance, clearly acting as resistance, working out perfectly. Seems likely that we're headed down here to the bottom of the range. I mean, somewhere around like $3 or something like that. You know, exchange like all-time lows on Polkadot. Crypto looks terrible. Matic closed down below that ascending support line. So we had that quick little push down here and then a push back up, lower high, meltdown. And now here we are below the 200 exponential again. Still above the 200 simple for now, but really need to see like 70 to 77 cents hold up. Or, you know, we're going to get a pretty heavy measure move down from this area. So if we look at something like this and we say, okay, this is our resistance, that's our support, you know, there's a lot of ways we can calculate a measure move. I just pick like the middle of the channel just roughly and just put a quick little measure move in place here. And then we can say, okay, look, we broke down, we try to get back in, we confirm. So a measure move to the downside would take us down, not one fib level, but two fib levels, likely to around like 50 cents. So, you know, beautiful move up here, but seems very, very likely headed to 50 cents or somewhere around there. BNB, so we talked about it. I've been blowing the whistle on BNB coin since way before the FTX meltdown, and I'm telling you right now, I could be wrong, but I've got a feeling, I've got a feeling that the little feud going on between Sammy and CZ could have gone either way. It was just a matter of who was going to get, you know, the leak of the balance sheet, who was going to win their little, you know, their little tiff, their little lady war, their little girl fight, or cat fight, whatever you want to call it. We'll see. I mean, Binance is at that level. It's that do or die zone in yellow. If we break down from that, just down to the only other support that Binance coin, BNB coin has left is 204. That's a $70 loss. So we're talking about a quick 33%. And then after that, I mean, we could be literally at $40. There's nothing stopping BNB coin from going to $40 if this area breaks, if we bust through 200. So I would be very, very careful. And I'm going to tell you right now, you know, if we could see Binance's balance sheet, I guarantee you there's a massive amount of BNB on their balance sheet. And you're like, oh, that's okay because they can just mint however much they want. Oh, okay, yes, correct. It is, in fact, a Ponzi scheme. Congratulations, you did it. You made my point for me, hypothetically. So, I mean, Binance about to collapse next. Is it going to be Gemini? Is it going to be some other exchange that I've probably never heard of that people are using? I mean, I don't know, but there's some serious fucking danger when I look at a chart like this. Serious danger. And then FTT looks strong. It looks strong. It is at $1.40, so it is racing to zero. It's pretty good. It's doing pretty well on the race to zero. So it is in the last like 6 or 7 days, it is down 94.69%, 95%. And if you do have any money on FTX, I'm sure that's down 100% because you'll never fucking get it back. Maybe you will. Maybe you'll get 10 cents on the dollar. Who knows? I doubt it though. So yeah, just complete meltdown. Will this be the last? Is this the last of the dominoes to fall? The last in the, you know, house of cards? I would say no. I would say no. And you know what? If this continues long enough, if we go into recession, depression, rates stay high for long enough, whatever, the same contagion is going to be happening in traditional markets. You know, and you're like, oh, the Dow Jones is not going to go down 95%. I'm not saying that. I'm saying individual, you know, companies, just like individual cryptos, will essentially go to zero. And it's just a matter of time. And that's a lot of why it's very hard for me to try to be bullish when I look at the Dow Jones. All right, so gold. Gold had to move back up to 200 exponential. We're expecting it slightly higher at 200 simple. So $1,800 gold looks very likely on the cards. Again, you know, reaction rally based on everything that we've been talking about. Very, very likely, yes. I do not think gold is breaking out and ready to go back into a bull market. Silver, same thing. Almost, I mean, we hit our target finally. Almost to the macro top, 22.59, which is what I'm expecting. Not macro top, but, you know, this move top, I should say. GSG. Commodities still going sideways inside the channel. I expect that to continue until we see some kind of resolution one way or the other. It could go either way for me. It's a coin toss. LNG, again, you know, Cheniere Energy, liquid liquefied natural gas, proxy, etc. 821 bear cross, likely headed down to support the 200 exponential and simple, and that support at 149, the previous multi-time top and bottom right here, seems very likely we're coming down to there. Should be at least a short-term buying opportunity. After that, we'll see if it puts in a lower high or a higher high. MOS Mosaic, again, just kind of going sideways. I look at this very, very similar that, it's making up its mind which direction it wants to go. Very close to failing and confirming into a bear market. Very possibly could, move back up here and go to new highs. It really is a coin toss. Uranium, URNM, holding up for now, trying to reclaim the 200s. It looks okay. Like, uranium is, surprisingly strong, holding up surprisingly well. Cameco is not looking as bullish as it has been previously. It is now below the 200s, but again, these things are just making up their minds. There's just a lot of consolidation going on. Tilray, we're almost at target here. We're expecting to move back up to 200. We're almost there. We just have one more push up here. 441 is the technical target. You could argue slightly higher, 447. I would not get greedy and go for that 496. It's definitely a possibility. But we're at this descending resistance exactly. It's right where we closed. Do we get a push up here? Just long enough for us to close our positions? Probably. And then after that, straight to zero. Baba, I can't remember who I was listening to one day, but he goes, I think maybe Josh Brown or something like that. And he said something like, I don't know what it is about human nature, but I don't care how much I love an asset. The second I sell it, I immediately expect it to go to zero or want it to go to zero or something like that. And if that's not the damn truth, you just want to feel like a goddamn genius. You're like, the second I sold the absolute top, I locked in my gains and now it's worthless. Like the day before, it was like the best asset in the whole world. But the second it's not like in your favor, you're like, it's worthless. It's going to zero. I just think that's funny, but it's so true. So Alibaba next, little proxy on China, trying to confirm the 821 cross back to the upside after putting in new macro, new cycle lows. Very, very strong support down here. Not surprised that we did see a bounce from this level. I do expect it to go lower. We could see China surge back up here. We could see Alibaba go back to like 95. It's at 70 now. That would be a big move, like 50% from where we're at currently. Wouldn't it be crazy to see 20 to like 50% move in this? Momentum starting to build back to the upside. Earnings coming up though. It did beat the last 3 earnings. Didn't necessarily help the price action that much, but maybe it's just gonna beat again. No real like correlation or like useful data there, but interesting nonetheless. So Neo, same thing. We didn't quite get to the 618. We did get to the potential macro low that we had plotted out like months in advance. So what is this? Is that the bottom? Is it done? We'll have to wait and see. It's starting to build up some momentum to the upside. Did just have its earnings. Did see a miss by 82% surprise on earnings to the downside, and basically just even on revenue. It was technically a miss by 0.5%. The difference between 1.827 billion and 1.836 billion. But a miss nonetheless. Yeah, it missed the earnings basically by like 100%, almost 80%. So not good, obviously. Moved up quite a bit since then, though. So I guess that was just already priced in. It's up like 25% since the miss. Yeah, we'll see. This is a pretty strong resistance now at the 0.5. It's probably about top. If not, though, is it going back to $17 to retest the 200s again? Not crazy to think. Slinky theory is just continually chopping down. New lows, 200s, new lows, 200s. Until eventually it doesn't put in new lows. When is that going to be? I don't know. There's every time we hear something about China, it's like, oh, okay, that's the end of it. China's going to rally now. And then it rallies and it's just whatever it was not true or not sticky. So I'm just not going to buy into the whole China thing anytime soon until I see something actually change fundamentally or technically, preferably both. So let me jump in chat right here. Man, we went pretty quick. We ripped through quite a few assets in 44 minutes. Geo Luke says, loud and clear. Man, what if you were muted? I would feel like a fucking idiot. Would have just been talking to myself the whole time. Gabriel, what's up, Gabriel? Good to see you. I'm in ETH. Uh-oh. I guess it could be worse. You could be an FTT. I don't think now is the best time to be hodling cryptos. If you're a trade, where's your take profit? Where's your stop loss? Whatever. Just make sure you're managing your risk, not just hodling. I mean, unless that's your goal is to just hodl, but it's not working out well for people right now. Yeah, CPI is bollocks here in the OZ. The housing component only actually for 7% of the total. I think in the US it's like 30%. That's bonkers. Yeah, I mean, it's all weird how all that's calculated. And the truth is, too, if you like look into the CPI and see what the actual factor was, there was basically like a change in how healthcare costs are calculated. And that accounted for the difference in what would have been a miss and a beat in the CPI. So it's like basically saying right before you put out like a key statistic that's been measured one way, the same for 10 or 20 or 50 or however many years. And then suddenly you just say, hey, actually, instead of like multiplying that component by, 0.5, multiply it by 0.25. And then it completely changes all of the data. But of course, it's not reflected that the change in calculations is the reason for the change in the data. But if you dig in deep enough, you'll see that, again, there's a reason we call it, the cooks. They're cooking the books and whatnot. So, but I mean, yeah, it's crazy how much different it is. Here we have something called owner's equivalent rent too, which is they don't actually just like look at the like average rental price or, asking rent or something like that. No, it's a survey based on like owners. And then they ask them, hey, if you were going to rent out this property, how much would you charge for it? So, obviously does not reflect realistically. I mean, I think most people probably, unless they're a regular renter of properties, doesn't know, what the average rent's going to be in their neighborhood. And they might not even have comps, or maybe they do, depending on what kind of neighborhood you're looking at. But, it's clearly just a total BS way to measure stuff. Geo Luke says, come to think of it, booze makes up something like 5% of our CPI calculation. It's not far off housing. Crazy. Yeah, that is crazy. But, in their defense, though, you do need both booze and housing. And if you lose your housing, you need even more booze. Now, if you lose your booze, though, you don't need extra housing. Jay Hoff says, good stuff as always, man. Yeah, appreciate you, man. Glad you enjoyed it. So, yeah, I mean, we didn't miss anything. We just went quick. So, yeah, I think we're going to go ahead and call it there. I've been saying it for a while, but I'm going to resume the static videos. I'm going to be doing like short, medium, and long-term TA videos, somewhere around like 5 to 10 minutes a piece or something like that, for just like different assets or different asset classes, and just posting them up on the regular. So I've been saying I was going to do it again for a while. I think it's about time I start back up. I want to put that stuff out there and have those resources for people so that they can see, going into the future or whatever, that the TA videos don't necessarily have to get dated the same way the live streams are. Because I think a lot of times you're like, oh, if I didn't catch the live stream, like, sure, I might watch it the next day or whatever, but nobody's watching live streams from like 6 months ago. You might watch a static video on, long-term technical analysis for like uranium or oil or DXY, whatever. So yeah, that's it. I'm going to go ahead and wrap it up there. Appreciate you guys. Everybody have a great night. Thank you all for tuning in. If you haven't liked, if you haven't subscribed, if you haven't told your friends about this awesome fucking channel that's definitely not technical analysis, I highly recommend that you do so. Yeah, so that's it. As always, it's not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. It is Sunday, 8:51 p.m. Eastern Standard Time on 11/13/2022. I'm, of course, crypto trend trader. And, of course, it's not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. Everybody have a wonderful night. Appreciate each and every one of you. And, yeah, I'm getting the fuck out of here. Peace.